What is going on, my friends? Ryan Williams here, back with another one, and in today's video we are going to go over 4 super high yield dividend stocks that you can add to your portfolio to dramatically increase your dividend income. Now, I personally have each of these stocks in my portfolio, and like I said, they all pay a lot in dividends, and their dividend yields range from about 5% on the low end up to about 8.5% on the high end. So we are going to go over some quick stats surrounding these stocks, and then I put together a little sample portfolio with just these 4, which we are going to use to try and project how much dividend income you'd end up with if you invested in just these 4 stocks over a certain period of time. I think you're going to like what you see. So that's what we have coming up first, and then later on in this video, I'll be going through a weekly portfolio update where I'll show you guys what's been going on in both of the Easy Money dividend portfolios, my taxable brokerage account on Charles Schwab, and also my Roth IRA on M1 Finance, and we'll discuss how both of those performed in the last week, as well as any purchases that were made. Anyway, before we get rocking and rolling, if you guys love high yield dividend stocks, then go ahead and give this video a big thumbs up. Also, leave me a comment below and let me know what are some of the highest yielding dividend stocks in your portfolio. I'd be very curious to know. Anyway, thank you so much for doing that. And now, without further ado, let's get into it. All right, my friends, now the first stock we are going to be talking about today is Enterprise Products Partners, ticker symbol EPD. Now, for those of you who have never heard of EPD, maybe aren't familiar with this company, essentially what they do, guys, they are a midstream energy company, and they store and transport different energy products like natural gas liquids, crude oil, petrochemicals, and other refined products. I'm reading that right here in their company bio. And it may sound a little bit boring, but it's actually very cool what some of these things that they store and transfer end up becoming. The end result is really a wide variety of different products and other uses. And as you guys can see on the screen from this graphic right here, it kind of breaks down for us just how some of these raw materials are used in our everyday lives. It also shows the main materials that we store and transfer, kind of like we just talked about: natural gas, ethane, propane, butanes, C5+, which I believe is pentane. That C is carbon, so pentane has 5 different carbon atoms in it. Just a little chemistry info for you guys. And then butane has 4, propane 3, ethane 2. And like I said a moment ago, guys, the end use for a lot of these products is very diverse. I mean, starting with natural gas, for example, it can be used in things like fertilizer, paint, even glue. Moving on to ethane, that can be used in things like food packaging, prosthetics, water pipes, medical tubing, insulation, so on and so forth. You can read the list. So in a nutshell, guys, this is what EPD does. And scrolling up, let's go through a little share price performance for this company. So they're really not known for doing too much in terms of capital appreciation. Investing in a company like this is really for someone who wants to generate more passive income, create more cash flow in the form of dividends, or in EPD's case, distributions, because it is an MLP, which we've talked about in previous videos. But nonetheless, guys, going back to the share price performance, in the last year, it's up about 4.8%, which is really not too much considering how so many other stocks have appreciated in the last year. Moving into 6 months, they are down about 2% in the last 6 months. In the last 30 days, they actually have done really good. They're up almost 13% in the last 30 days. So this company has been on quite a run. And then in the last 5 days, guys, they're up another 1.85%, which is actually pretty good in such a short period of time, especially for a company like this that really doesn't do too much in terms of appreciation. But one thing I want to do before we move on and talk about the high dividend of this company, I want to show you guys the 5-year performance. And as you can see, like especially from, I mean, we can go all the way back. It's pretty flat. In fact, it pretty much always stays below the $30 per share mark, as you guys can see here. And then it had a huge dip in 2020, recovered a little bit, guys, but then it's really just not done too much. So as I mentioned, one maybe would not invest in this company if they were looking for capital appreciation. We're looking for the share price of their stocks to go up. This is really more for someone who is interested in dividends. And with that said, let's go over to the dividend page and check out some of the dividend stats for this company. Starting with the forward dividend yield, EPD's is 7.81%, which is extremely high. Okay, they have a relatively high payout ratio of about 86%, which actually is normal for a company like this because as an MLP, they have to pay out a lot of their earnings to us as shareholders. It's similar to a real estate investment trust in that regard. And then moving on to the 5-year growth rate, guys, there's really not much to talk about there. The 5-year CAGR here is 2.5%, 2.51 to be exact. And then they have a dividend growth history of 22 consecutive years, which is actually pretty solid. And before we move on to the next stock, guys, a little disclaimer for you guys watching this video. Because this company is an MLP, a master limited partnership, there are some tax implications of owning companies like these. It's different from a regular corporation like a Coca-Cola or a Procter & Gamble. So before considering buying into a company like this, I would highly recommend you do a little bit of research on master limited partnerships partnerships and see how that might affect you come tax time, because it is a little bit different. You'll be getting a K1, a Schedule K1 at the end of the year versus a 1099 from your brokerage statement. So that can make things a little bit tricky come tax time. Definitely worth looking into. All right, my friends, moving on to stock number 2, we have Owl Rock Capital Corporation, ticker symbol ORCC. And ORCC is a business development company, a BDC, and essentially what these type of companies do is they will loan money out to other businesses, maybe distressed businesses or businesses who need financing to get to the next step and continue growing. So this company will loan some funds to those businesses and then generate revenue off of the interest. Some BDCs only loan money out to companies in specific sectors, like maybe in the tech sector or maybe in the healthcare sector, but ORCC is kind of all over the place. And if we jump over to this page right here, this will give us a little overview of their entire portfolio and show us the different types of companies that they loan money out to. So scrolling down, guys, we are going to look at the industry diversification here. And you can see that there's a lot of different industries right here, guys. 10% of their portfolio is internet software and services, 9% insurance, 8% financial services, 7% healthcare providers and services, another 7% in food and beverage, and then we can keep going down the line just to see all the different kinds of industries they're in. And in the same way that us dividend investors might want to protect ourselves from any sort of downfalls by investing in companies within different sectors like consumer staples or energy or materials or utilities, so on and so forth, ORCC does the same thing in the types of businesses that they loan out to, which I think is a good move and definitely adds a little bit more resilience to this company. And BDCs in particular can sometimes be a little bit speculative, especially because they are loaning money out to potentially distressed businesses who are at the risk of going under due to poor financials or what have you. So having a little bit of diversification here is definitely a good thing to see. Now going back here, guys, we'll talk about a little share price performance, but just so you know, just like with EPD, BDCs like ORCC, they will not do much in terms of capital appreciation. I mean, you can see from this chart right here in the last year, ORCC has traded pretty flat. I mean, the chart here says it's up about 15% in the last year, which is true, but for the most part, guys, especially all of 2021, it's been pretty flat. Anyway, in the last 6 months, ORCC has really not done much. No surprise, up 0.62%. In the last month, they've actually done fairly decent, up about 3%. And then in the last 5 days, not much movement at all, which is totally fine. Companies like this, just like with EPD, are really more of an income play. And with that said, guys, we are going to jump over to the dividends page and take a look at what ORCC has going on in that department, which actually looks to be a little bit sweeter than what we saw with EPD in some ways. Now, starting with the forward dividend yield, ORCC's is about 8.5%, which is going to make it the highest dividend paying company of the day. Their payout ratio is pretty dang high, over 100%. And just like with real estate investment trusts or MLPs, BDCs tend to pay out a lot of their earnings to shareholders in the form of dividends, okay? So this isn't super alarming to see a high payout ratio. I would definitely do some more due diligence if I was you guys, jump over to the financials page and see why that payout ratio is over 100%. Now, moving on, guys, for the dividend, there's no 5-year growth rate because there's really no dividend growth history. Now, this is a relatively new company. I think they started back in like 2016, 2017, so they're only about 4 years old, still trying to get their footing. And if we go over to the dividend history page, we can see that in the 4 years or however long they've been operating, they've been paying those dividends for 2 consecutive years. And actually, just to confirm how long they have been in operation, let's scroll down to the company profile because it will tell us that there. Okay, so 2015. Okay, so they've been around for the last 6 years. Still relatively new company. It may be a little bit speculative, guys, but that's kind of the nature with BDCs. There's some good ones, there's some bad ones. And analyzing the fundamentals for them is a little bit different than what you would do for like a Coca-Cola or Procter & Gamble, just to use those same examples. And before we move on to the third stock, guys, one thing I will address, I mean, obviously we're not going super deep into any of these stocks today. I really just want to give you a taste for who these companies are, what they do, and show you their dividend stats, because the premise of this video ultimately, guys, is to show how these high yield dividend stocks can come together and really help you skyrocket your dividend income, which, is the title of this video. So with that said, if you guys want me to do a deeper dive on any of these companies, whether it's EPD or ORCC or any of the other two we're going to talk about, leave me a comment below and let me know. I'd be happy to do so. But in case you guys were wondering why we're not talking about the financials or the valuation or whatever, it's just because it's not the main point of this video. All right, my friends, now moving on to the third stock of the day. This is one of my favorite stocks. I talk about it quite often on my channel. This is Altria Group, ticker symbol MO. And if you've been dividend investing for really any period of time, this is most definitely a stock you will have come across because it is a relatively popular dividend stock to hold for good reason. They have really solid dividend stats, which we'll take a look at in just a moment. But for those of you who are just starting out and are hearing about Altria Group for the first time, I want to give you a little bit bit of insight into what they do. So Altria Group makes and manufactures different tobacco products. It could be things like cigarettes or cigars or chewing tobacco, smokeless tobacco, and they're even invested into some other industries like alcohol through Anheuser-Busch, which we'll see in just a moment, as well as the up-and-coming cannabis industry with an investment into Kronos Group, which we'll also take a look at momentarily. And sticking to that point, guys, we are going to jump over to this screen right here and talk about some of the companies that are under the Altria umbrella, if you will. Now, scrolling down, guys, starting with Philip Morris. This company manufactures brands like Marlboro, Virginia Slims, which I'm not a smoker, but these are companies that I have definitely heard of. Moving on to the U.S. Smokeless Tobacco Company. They make chewing tobacco, and their two big brands are Copenhagen and Skoal. Also, really not my cup of tea, but I have heard of these companies. Now, moving on to John Middleton here. John Middleton manufactures pipe tobacco and cigars with their big brand, their really big brand being Black and Mild. Now, scrolling down a little bit more, I mentioned the Altria Group has a stake in Anheuser-Busch and Kronos Group, which you can see right there. And to be more specific, Altria Group has a 10% stake in Anheuser-Busch, which is obviously a huge alcohol manufacturing company. And I could be wrong, but I do think I remember that they were going to sell it or have sold their stake in this. I'm not 100% sure. I'm guessing they still have it if it's still on their website. And then I'm sure you guys have heard of Juul. It was all the rage for quite a bit. Altria Group has an investment into this company, as well as Kronos Group, which this is their way to get into the cannabis industry. And Kronos Group is a Canadian-based company out of Toronto. Now, going back to this page right here, guys, getting to a little share price performance for MO. In the last year, they're up about 22.5%, which is pretty solid. And then in the last 6 months, they're up 7.5%, not too shabby. In the last month, they're up 11%. They've had a really good run up in the last 30 days, as have a lot of other stocks, to be fair. And then in the last 5 days, guys, Altria Group is up another 1%. But historically, guys, I mean, across a longer period of time, Altria Group is still down. They're down about 25.5% in the last 5 years. So they have some catching up to do. And some of this could have to do with a decline in cigarette sales. I don't know if that's globally or if that's just in the US, but I do think that's something that is hurting this company's share price. But that's okay for now, guys, because it is keeping the price low, which is going to make it easier for us to reinvest those dividends, which are so sweet coming from this company. Which brings us to the next point. Let's go over to the dividend page right here and talk about the dividend stats. Now, for Altria Group, guys, they have a dividend yield of 7.16, which is extremely high for a company that's in the consumer staples sector. Usually, if we're looking at companies like Procter & Gamble or Coca-Cola, I keep using those examples, guys, but they're like the first ones that come to mind. You'll find those in like the 2 to 3% range, but seeing something like this for a consumer staples stock is very much a treat. The payout ratio for Altria Group is considerably high. Okay, about 80%, which really, guys, is about 20% higher than maybe where we'd like to see it. But to be fair, this is also a normal occurrence for Altria Group, so we need to take that into consideration. They seem to be operating just fine with a high payout ratio, so because of that, this may not be that concerning. You guys might have a different opinion on that, and if so, I'd be curious to hear about it in the comments below. Moving on to the 5-year growth rate, that's also very high, 8.42%, which I believe is high considering their already high dividend yield. So with Altria Group, you get not only a high dividend yield, but you also get a high 5-year growth rate. And with that, guys, you also get a really respectable dividend growth history of 52 consecutive years, which makes Altria Group our first dividend king of the day. And I actually think our only dividend king of the day. All right, guys, now the last stock we are going to be talking about today is WP Carey, ticker symbol WPC. And this is one of 2 real estate investment trusts in my portfolio. And out of the 2, this one has the higher dividend yield. And before we go in and talk about the share price, I want to give you guys some insight into WP Carey's portfolio. They have a lot of great properties, and more specifically, they have a lot of great tenants. Now, scrolling down here, guys, this is directly from their website. Just like we were talking about with ORCC, WP Carey is very diverse in the industries that they have tenants in. I mean, retail stores right here is a big chunk of their tenants, consumer services, automotive, grocery, beverage and food, cargo, healthcare. A lot of businesses and a lot of different industries are renting from WP Carey. But scrolling down, I want to show you guys the top 10 tenants. These are going to be some pretty big companies that you've definitely heard of. The first of which, their biggest tenant being U-Haul right here, which makes up about 3% of their total rent base. Number 2, State of Andalusia, which I'm not familiar with this company, but it looks to be a government office in Spain. Number 3 is Hellwig, which is a company based out of Germany. 4, Metro Cash and Carry, which is another European company. And talking about some more maybe recognizable company for us US investors here, we have Marriott International, which are obviously hotel properties, and then we have Extra Space Storage, which are self-storage properties properties located across the country. Now, going back to Seeking Alpha right here, guys, we'll get into a little share price performance with the last year's performance for WP Carey being up about 20%. That's really not too bad. And then going into the last 6 months, they're trading pretty flat. Okay, only up about 2.75%. And then looking at the last month, guys, the last 30 days, they're also pretty flat. They're only down about 0.33%. I will say though, guys, my personal position in this company has done pretty good in terms of capital appreciation. I mean, going over to my spreadsheet right here, WP Carey is this row right here, guys. And my position is currently up over 14%, which is really not too shabby. I definitely think it's one of the top 10 performers in my portfolio. But that's neither here nor there, guys. Going back to Seeking Alpha, we're going to jump over to the dividends page and talk about WP Carey's dividend stats, starting with their forward dividend yield. They have a forward dividend yield of 5.29%, a payout ratio about 90%. All the companies that we've talked about today have relatively high payout ratios. And in all cases, guys, that's pretty normal for these companies. The only one that it may be concerning for is Altria Group, but then again, like I said, they tend to have a consistently high payout ratio, so that's just naturally how they operate. Moving on, WP Carey has a 5-year growth rate of 1.37%, which is very low. However, the dividend yield is somewhat high, 5.29%, and that's not too bad for being the lowest dividend yield we've talked about today. And then this company has a dividend growth history of 9 consecutive years. Now, jumping over to the dividend history page, we can see that they have been paying their dividend for 23 consecutive years. So they've been paying it for a lot longer than they've been consecutively growing it, if that makes sense. And if we zoom out here, yeah, that makes sense. Like, look, that's a very steady payment since like the late 90s. All right, guys, now those were the 4 stocks we were going to be talking about today. Now what we are going to do is we're going to switch gears and check out a sample portfolio just with these 4 stocks. And switching the page here, you can see that right here. I have a little demo portfolio just made in my Google Sheet spreadsheet. And in this sample portfolio, guys, is only the 4 stocks we talked about today: EPD, Altria Group, ORCC, and then WP Carey. And in this example, guys, we've accounted for basically $1,000 invested total. That's going to be our starting contribution, and that's divided equally amongst these 4 stocks. And now what we are going to do, guys, is we are going to jump over to the Market Beat Dividend Calculator, plug in the information, plug in the stats for this portfolio, and see how it will grow across the next 20, 30 years. We'll do a couple different examples there, but before we jump over there, a couple other important stats to know about this sample portfolio. The dividend yield is 7.11%, and so far the annual dividend income is about $71 just with this initial $1,000 contribution. All right, guys, now we are over here at the dividend calculator, and we're just going to start plugging in the information for the spreadsheet. So starting principal is $1,000, annual dividend yield, we just saw 7.11%. And then, guys, let's say in this example, we are going to let's say that we're going to contribute like $6,000 a year. And if this was a Roth IRA, you basically would be maxing it out. So we'll just use that number, guys. And then let's say, guys, that we can expect the dividends to grow probably by, we'll say 4% every year, okay? That might be a little bit high, but we're going to rock with that. The distribution frequency is going to be quarterly. Dividend tax rate, let's actually bump that up a little bit higher. And because most of these stocks really do more in terms of income than appreciation, let's say that it's going to grow by like 5% every year on average. That might be a little bit low, but we can be a little bit conservative here, okay? And then let's do this across the next 20 years. We'll try 30 years to see how that plays out, but let's start with 20 years to see where you would end up. So we're going to hit calculate dividends. And as you can see, just in this first year, it's pretty spot on with what the Google spreadsheet told us, okay? The annual dividends, about $70. But at any rate, guys, we are going to scroll down, and in that 20th year, you'll be generating about $20,000 in dividends, which is really nice. And then the portfolio value will be about $358,000. And in this 20th year, if we're comparing the share price appreciation to the amount gained in dividends, the dividends are actually doing better. You're gaining about 20 grand in dividends, but the capital appreciation is 16,000, so about $3,000 less. So I think that's pretty solid across 20 years, and this is also taking taxes into account. But now let's scroll up, guys, and let's say that you let this grow for another 10 years. So for 30 years, and then let's calculate that and see what the portfolio is going to look like after 30 years. Now, scrolling down all the way to the bottom, guys. So just comparing 20 years to 30 years, in that extra 10 years, you will go from an annual dividend income of about $20,000 to an annual dividend income of about $50,000. So you're going to more than double your dividend income just in 10 years. And then that portfolio balance is basically going to triple, okay? You're going to go from about $358,000 to just shy of $1 million. And that's with a $6,000 annual contribution, which, check my math on this, guys, but that could amount to somewhere between $125 and $150 see every single week, right? Which probably for the average investor or someone just starting out could be a little bit high contribution, but I definitely think it's one that is worth working up to if you're not quite there yet. And with that said, obviously, the quicker that you can contribute money to your portfolio, the quicker that it's going to grow and the higher that the dividend income is going to compound. And to conclude this portion of the video, guys, before we move on to the portfolio update, I really am not actively buying any of the stocks that we've talked about today, me personally, except for Altria Group. I am intermittently buying some shares of that, but I haven't picked up any ORCC for a while, not because I think it's expensive, but I want to keep that because it is a little more speculative. I personally am keeping that a little bit lower of an allocation in my portfolio. WP Carey, I think, is a little bit too expensive for my taste right now. And then EPD, I have plenty of in my portfolio. I'm totally comfortable with my EPD position, but I just wanted to share that so you guys know where I'm at with all 4 of these stocks. And then with that said, guys, leave me a comment below. Let me know, do you have any of these stocks in your portfolio? I'm sure a lot of you guys have MO, but I'd be very curious to hear if you guys have ORCC or WP Carey or even EPD. All right, guys, now moving on, let's jump over to the spreadsheet right here. I want to go back to the dashboard page and zoom out, and let's get into a little weekly portfolio update. So as you guys can see, the market value of this portfolio has grown a little bit just this week. The current market value is $34,342.45, which, as you can see on the screen, is just a few $100s, or really about $250, $260 higher than it was this time last week. So nice little gain in the last week. And then as far as the total gain, guys, last week the unrealized gain was sitting at 9.76% and just over $3,000 in dollars. So overall, it's been a pretty decent week on the market, and I'm filming this video on Friday. What's the date here? January 14th. And just today, guys, it did pretty well. I'm up $100 for the day, not too shabby. And we are almost at 80% of the income goal for 2022. By the end of September of this year, I would like this portfolio to be over $2,000 in annual dividend income. I think we can get there. Every single week, we're chipping away at it, guys, and it's doing pretty good. Now, switching gears, I want to jump over to this portfolio summary page and talk a little bit about what I picked up this week. So this week was just a pretty typical week for me, guys. That's the thing with dividend investing. There's really nothing crazy that happens. It's just weeks and weeks and weeks of consistency and chipping away at it and contributing and slowly building that dividend income and building out this portfolio. But I basically just bought the same things that I've been buying, guys. I bought some Lockheed Martin, I bought some more Intel, and I bought some AT&T. And as far as AT&T, guys, we're about 93.5 shares. As you guys know, my goal is to get this to 100 shares, and I'm chilling. Okay, I probably won't buy any more AT&T until after the spinoff at some point. But after 100 shares, I'm good. I don't want to have too much of this in my portfolio. I think currently it's about, what is it? What's the allocation? Almost 7.5% of my portfolio, making it definitely one of the higher positions that I have. Second highest, only behind Realty Income, ticker symbol O. But with that said, AT&T has been doing really well lately, guys. I'm sure you know it's just been on a tear. And actually going back over to Seeking Alpha, what's AT&T done in the last month? It's been really good, guys. So just in the last 30 days, AT&T has climbed 20%, which is good to see. We're now in the $27 per share range, which is getting pretty close to my average cost per share, which I think is $28 and some change. $28.65 is my average cost per share with AT&T. And I gotta say though, guys, just in general, it's actually been kind of a struggle deciding what to buy. I mean, I know I've been buying these 3 stocks for some time now, at least Lockheed Martin and Intel, but even those guys, those have done pretty well in capital appreciation, and they're getting to a pretty decent size in my portfolio. And I've been considering switching gears and buying something else, but I'm just not quite sure what I want to switch gears into and buy instead of these 3 stocks. I mean, not only are they becoming substantial positions in my portfolio, which I want to be careful. I don't want to have too much of any one stock, you know what I mean? But also each of these stocks has really grown in share price, kind of reducing the level of discount that they're at, especially Intel and AT&T like we saw. But Intel's also been climbing pretty high in the last month, okay? So we'll see, guys. I know I've teased kind of switching gears and doing something different, but what that is, I'm not quite sure. I don't know. It's an interesting time to be a dividend investor right now. And I know a lot of you guys just from hearing about it in the Discord and chatting with you guys in the comments or whatever, but a lot of you guys are feeling the same sentiment. And I know a handful of you out there are sitting on some cash right now. I was chatting with one of my friends, Jacob Morris, in the comments, and I know he's sitting on some cash. With that said, shout out Jacob. If you guys have not checked out his channel, definitely do so. He talks a lot about dividend investing, and I actually think he's a little bit better of an investor than me. Definitely a very knowledgeable guy. So if you're looking for some great dividend stock information, check out his channel. But I know he's sitting on cash. My other friend, Joel Batista, who is very active in the comments, is sitting on some cash as well. And I'm sure there's a good handful of you guys out there who are also doing the same thing. It's just a lot of stocks are really going up, so it's tough to figure out what to buy. So that's what's been going on in this portfolio, guys. Now jumping over to M1 Finance. This is the Roth IRA that I just created not too long ago. It's now been, I think, just over a week or so, and I am overall down 1%. I'm down about $5 in easy money squared, which is okay, guys. No big deal. Essentially, my game plan for this one right now, until I increase the contributions, I'm just putting $50 into this every single week. And the cool thing about this is it's completely hands off. I have auto deposit set up, and then I have auto investment set up. So pretty much just this is going to grow on autopilot until I change the settings. And it's very simple what it's going into, guys. There's just 5 different Vanguard ETFs that I'm deploying that $50 every single week into. And although I'm very happy to have started this new portfolio, this Roth IRA, I think that's a good move. I did so at a very interesting time. I basically started buying these ETFs at like all-time highs. I mean, if we see any sort of correction or even a crash, I would anticipate that I'll be down quite a bit more than 1% in the Roth IRA. But that's okay. I can't touch this portfolio really for another 30 years, so I've got plenty of time to recoup that and buy the dip, as they say. And that pretty much wraps it up for today's video, guys. But as always, we covered a lot of good ground, talked about some really great high-yield dividend stocks, and talked about what's going on in both of my portfolios here, which, nothing crazy. Being a dividend investor, if you haven't figured it out already, is a lot less exciting, and it's also a lot less sexy than investing in growth stocks and ones that jump up 1,000% in a week. It's just a totally different strategy, but I gotta say, there is something addicting to seeing your dividend income increase every single week, and there's something even more addicting about seeing those dividend payments hit in your brokerage account. There's just a few better feelings than getting paid, $30, $35 for doing absolutely nothing. And the cool thing is, as time goes on, the longer that you just let that reinvest, those payments are going to keep growing. But anyway, guys, before we close up shop for today, if you wouldn't mind doing me a couple favors, that'd be awesome. Number one, leave me a comment below. What are some of the highest yielding dividend stocks in your portfolio? I'd be very curious to hear the high yielders that you're invested in. And also number two, if you have not done so already, don't forget to leave a like, leave a thumbs up on this video before clicking on to the next one. And then last thing, guys, if you want access to the spreadsheet that we saw today in this video, it's one that I made myself. You can grab it for free in the description of this video. The link is right there. All you need to do is click the link. It'll open up the spreadsheet, and then you need to go to File and then make a copy, hit OK, and then you can start inputting your own data. And with that said, guys, I will now get out of your hair, but thank you once again so much for watching this video. I really appreciate it. Hope you guys have a great day, and I will see you in the next one.